let's get back to oil. OPEC's potential production hike is weighing on crude. Our guest says bearish sentiment rules in the oil market. We're joined now by Rebecca Babin, senior energy trader at CIBC Private Wealth. Thank you very much indeed for joining us, Rebecca. It's great to see you once again.
Thank you for having me.
If I can summarize some of your thoughts here, bearish sentiment still dominates, and you are in the camp that believes that OPEC Plus is shifting strategy now from supporting prices to fighting for market share.
Yeah, so I think the sentiment in the market remains extremely bearish. And as you mentioned kind of on the lead up, I think that most hedge funds or macro investors want to express a negative position in crude, either by being short or being long put options. What I am seeing is that there is this tail risk that's out there concerning Iran. And that's kind of, if they want to be short, they want to make sure they have a little bit of that tail to the upside covered in case things with Iran escalate. So I think sentiment is a key reason why we see kind of these, every rally that we get is kind of met with supply, because I really think that most investors see the supply and demand fundamentals as very bearish and are looking for opportunities to reestablish shorts or get downside exposure. And a big part of that has to do with the OPEC strategy. And they've really shifted gears. We're going into a meeting on June 1st, and the expectation is that they continue to accelerate their production cut unwinds. The last two meetings, they were supposed to bring back 110,000 barrels. They brought back 400,000. That's a huge increase. The expectation is they bring back 400 at this next meeting, and it really makes any rally that we see better demand, tariffs, geopolitical, met with the supply, because we're finally seeing OPEC Plus utilize kind of a strategy that uses market share as opposed to price stability.
Is this partly the regime in Riyadh ticked off? They've been disciplined, they've restrained their own production. Meanwhile, they see some OPEC Plus members cheating.
I certainly think that's part of the logic for sure. I mean, Saudi Arabia in particular has shouldered a huge portion of all of the discipline and cutting back on production. They did the lollipop cut, which was 1 million barrels of voluntary reduction in production. So yes, they've seen Kazakhstan overproduce for over a year. They're seeing Iraq overproduce. I think they've had enough of that. I think there's also a political rationale here as well. We just saw last week when Trump was in the Middle East, these huge deals being inked, and it clearly makes a lot of sense to be, on Trump's good side. And I think this was an opportunity to punish some of their members who weren't compliant, be on Trump's good side by bringing back production and keeping crude prices contained, which is a huge talking point for Trump. And then lastly, and I think this is something we kind of overlook, their production cuts were becoming less and less effective. So the strategy they were using was no longer yielding the results they wanted. So they said they might have been thinking, okay, we have a market reason, we have a political reason, and guess what? Our tool is not as effective. This is why we're changing gears. So I think all of those things have contributed to kind of why they've changed their strategy. And I don't suspect that they will stop. I think they're going to continue to bring back this production throughout the course of the summer. One buffer we have to this increase in production is summer driving season, where demand increases in the United States, as well as in the Middle East, very hot temperatures, which typically increases domestic demand. So it might not all be as bearish for the market as the headline reads, because we are entering a seasonally strong period.
Right. Yeah, they burn vast amounts of oil, I think, in Saudi Arabia to keep the air conditioners going. You referred there to lollipop cuts, and that came from the Saudi energy minister. I think it was in 2023. And he was referring to, I think, surprise short-term cuts. And that's the strategy they've adopted. But do you think this is a serious change in direction by the Saudis here? Maybe sending a message to other producers, watch out, we can hurt you in terms of price?
Yeah, I think it is. I think it's a real message and I think it's a real shift. I don't think this is one where they're going to, have increased for a couple months and then all of come back and say, you know what, we're going to actually cut. I don't think that's in their best interests in any way. It doesn't make sense for the market because they might not get rewarded. It doesn't make sense politically. So I don't think there's any rationale for them to do that. Thus, I think they continue on this path. And keep in mind, they have other members who have really wanted to increase, who have made investments to increase production in years past. And I'm speaking to the UAE here, right? They invested in this ability. And I think, Saudi Arabia and the rest of the group are realizing like we need to reward those who have made the investments and not necessarily reward shale producers, right? So I think that's kind of where they're playing at here. And I think the message, is very clear to the broader market. And if we look at what shale producers and E&P companies said in the first quarter of this year when they released earnings a couple weeks ago, they said we're cutting CapEx. They're taking Saudi Arabia and this production increase very seriously, and saying, we're going to cut CapEx. This will probably result in lower U.S. production this year, potentially 200,000 to 300,000 barrels versus 400,000 barrels, which was expected. So nobody, I think, is looking at these actions and saying, oh, this is a head fake. I think they're taking it very seriously.
We're tight for time, but I believe that you think that if WTI was to slip down from its current range to 58, 59, you believe the risk reward would start skewing favorably.
So, yeah, I do. I think crude, just given the sentiment and how much I've seen demand revisions already come down on the back of tariffs, and kind of the way it's traded, how much production might come offline should we hit the mid 50s, right, from U.S. I think we have a balancing mechanism in there, and I think we have a floor. Now, this is in a scenario where we don't go into a massive kind of global recession. This is avoiding a recession, but slower growth. I think we're fairly priced in the mid 50s for that. And if any kind of positive developments happen, we could see nice upside because there's really nobody who is thinking in those terms right now. All the conversations are on how much downside is there in crude? Are we going to hit 40? Those are the conversations that are happening, not how do we get to 70. So I like the risk reward in the mid 50s in TI.
Thank you so much, Rebecca. Great hearing from you. Rebecca Babin, a senior energy trader at CIBC Private Wealth. Coming